Okay, guys, hope you are good and well. Actually, BTC has claimed from lower ranges and is currently testing a key resistance zone around 1 lakh 13,000 to 1 lakh 15,000. A clear breakout above this could open the door to high targets, and the resistance lies near 1,16,000 and sport lies 1,06,000 on this range. So if markets break on this consolidation pattern, then market towards trend shifted towards trend on this side. If Bitcoin breaks and holds above 1,16,000 with high volume, then market 1 lakh towards reach towards 1 lakh 26,000. So if markets break this zone in the downside and this support of 1 lakh 6,000, then market continues toward downward direction and the next level is 1 lakh thousand. If support around 1 lakh 6 or 7,000 breaks, BTC could dip towards 1 lakh or even lower before reaching traction. Technically bullish trends remains, but the structure asks for confirmation or may give warning spot break. On the other side, market making a bearish flag patterns on this range, and so here is the bearish flag pattern. Market touch and retest this zone, then market consolidate on this zone. So if market continues toward downward direction, breaks this zone on the downward side, then market continues toward downward direction, because a volume profile also shows that more trades are input on this zone and the volume also lows on this zone. That is why market showing the downward momentum and consolidation, market moving toward with low volume on this zone. So hopefully market break this zone towards downward side and continues toward downward, because the fear and greed index also shows that 37% fear of the traders. The narrative of institutional opaque ETFs large initiates adds structural demand for BTC, which is bullish, and with inflation data showing some softness and the potential for looser monetary policy, Bitcoin benefits from low yield, high risk appetite environments. On the flip side, regulatory clarity, the US dollar strength and macro shocks remains major risk factors. If the dollar values for or regulation tightness and BTC could face headwinds. Actually, Bitcoin really depends on Fed cut rates, institutional investment, and tech moves. Bitcoin really highs on Fed cut rates, institutional investment, and while why rate cuts are bullish for BTC. So these are the statement for why rate cuts are bullish for BTC. Actually, Federal Reserve is scheduled to hold its next Fed Market Open Committee meetings. These are the meetings where America central banks decided to make changes in interest rates. There is a high likelihood that the Fed cuts interest rate once again. At least that's why the view of CME Group Fed Watch, which says that there is 94.7% chance that the Fed cuts rate by 25 basis points or 0.25% from the current 4% to 4.25% target rate down to 0.75% to 5%. In short, BTC next breakout may depend less on chain dynamics and more on how Wall Street reacts to Washington, making the coming weeks a pivotal tester of whether October can still live up its name. So the heat map also shows that 42.10 KBTC holdings, 168.21 BTC holdings, and other coins also shows that the holdings and the changes 1.9%, 3.15% on this coin, and 1.5% changes 0.15% ratio is increases in the market from BTC side. The fear index is shows that the traders are fear from markets 37%, and the movement of this BTC with low volume is so too much surprised because the rally could we can wait the rally and breakout on both sides. If breakout break this zone with a high volume on upside, then market continues towards upward direction, and if market continues towards breakout towards downward direction, then market continues towards downward direction. So trade be carefully because the markets are much surprised for beginner traders. Hopefully this video is helpful for you. Thanks.